All right, let's talk Rayonier Advanced Materials, ticker RYAM. Their latest earnings report, well, it was a real roller coaster. I mean, you see this massive headline miss, the stock just tanks, but then it stages this incredible comeback all in the same day. So the big question on everyone's mind, and what we're going to dig into right now, is this. Was this rock bottom? Was Q2 the trough quarter for RYAM?
So here's our game plan for this debrief. First, we'll tackle that headline miss, what went so wrong. Then we'll get into management's side of things, their big turnaround story. After that, we'll look at their actual strategic pivot, see how the market digested all this, and finally, we'll wrap up with what we're calling the next call, our take on what happens from here.
Okay, let's dive right in. Section 1, the headline miss. And yeah, the subtitle here says it all. This was truly a quarter to forget.
So let's get right to the ugly stuff, the earnings per share. A loss of $5.44. Now, to put that in perspective, Wall Street was bracing for a loss of about 22 cents. I mean, that's not just a miss, that's a crater. Now, what drove this? A huge $337 million non-cash charge related to a tax asset write-off in Canada. So to be clear, it's an accounting move, not like they burned that cash. But wow, what an absolutely brutal headline number.
And things didn't look any better when you looked at the top line either. Revenue came in at $340 million, but the consensus was way up at $387 million. That's a 12% miss. And a revenue miss of that size, it tells you something's not right operationally. It's not just an accounting thing. There were real issues in the quarter.
So, with those kinds of operational problems, what happens next? Well, you've got a massive guidance cut, and that's exactly what happened. Management basically took a hatchet to their full-year forecast. They slashed their adjusted EBITDA guidance from a midpoint of $225 million all the way down to $155 million. A cut that deep tells you this wasn't just a blip on the radar. These were serious headwinds.
Okay, so after seeing those numbers, you just know management has to have a story ready. And they did. They came out and basically made the case that this wasn't the new reality, but a one-time perfect storm of everything that could go wrong, going wrong all at once.
And leading the charge was the CEO, Vilio Blomquist. His key line on the call was, and I quote, "These challenges, we believe they are largely behind us." I mean, that's the whole ballgame right there. They're telling the market, look, that was awful, but it's over. It's an anomaly, not the new normal.
So how did they back that up? Well, they gave a pretty specific breakdown. They pointed to about $59 million in EBITDA headwinds that they say were, extraordinary. You had $21 million from tariff issues that messed up customer orders, another $18 million from operational disruptions, things like a labor strike over in France. Then you tack on $12 million in environmental charges and another $8 million from foreign exchange losses. The key here, the linchpin of their whole argument, is that all of this stuff is non-recurring.
Okay, so that's the rear-view mirror. That's their explanation for what went wrong. But what about the road ahead? What's the actual plan? That brings us to their big strategic pivot. They're basically trying to build a bridge from this disastrous quarter to a much, much brighter future.
And here's what that bridge looks like step by step. They're saying, okay, let's start with a normalized 2025 EBITDA of $200 million. That's after you strip out all those one-time problems. Then they plan to layer on $30 million in cost savings, another $30 million from just general market growth, and then, the big one, a $39 million boost from new biomaterials projects. You add all that up, and their target is to hit a run rate of about $308 million in core EBITDA by 2027. So, a pretty ambitious climb.
So what's going to power this growth? Well, the secret sauce is what they call recycling capital. The idea is to take their existing assets, their existing infrastructure, and leverage it for these new biomaterials projects. And the returns they're targeting are, frankly, pretty incredible. They're talking about getting 7 to 12 times their money back on these investments. If they can pull that off, it's a super capital-efficient way to generate a ton of new, high-margin revenue. All right, so you've got this crazy cocktail, right? A totally disastrous quarter on one hand, and this really ambitious, hopeful turnaround plan on the other. So how on earth did the market react? Well, it was genuinely a tale of two different trading sessions.
I mean, just look at this. Before the market even opened, the stock was getting absolutely hammered, down almost 12%. Total panic mode based on those headline numbers. But then the earnings call started. Management started laying out their plan, their story, and the buyers just came flooding back in. By the end of the day, the stock had rallied more than 15% off its pre-market lows. It's the classic case of the market sold the news, but it absolutely bought the story.
Which brings us to our final section. And really,
The bottom line. We're calling it the next call. This is our take on what really happens next and what we're watching for.
So let's circle all the way back to the question we started with. After all that, was this it? Was Q2 of 2025 times really the trough quarter for RYAM?
Okay, our call is a market perform, and here's why. On one hand, you have a turnaround story that is actually pretty credible. The biomaterials pivot has huge potential upside. But, and this is a big but, the execution risk here is massive. They've laid out a great path, but now they have to walk it, and it requires them to be almost perfect for the next couple of years. It's a high-wire act.
So, looking ahead to the next earnings call, what should you be watching? Well, first, the Q3 results. We're expecting to see EBITDA bounce back to around $55 million as those one-time issues hopefully fade into the background. As for the stock price, we think it's probably going to be stuck in a range for a while. The market's heard the story, now it needs to see the proof. And the key catalysts, the things that could really move the needle, are any news on the sale of their Temiskaming asset, and, this is the most important one, final, locked-in investment decisions on those big biomaterials projects. That's the stuff that makes this whole story real.
And as always, just a quick reminder that none of this constitutes financial advice.